You're sitting at home, checking your phone, when you see a message that makes you stop. The IRS is now taxing money you send to your family. Maybe you've sent your daughter a few $1,000s to help with a bill. Maybe you sent your grandson money for his car. Maybe a friend paid you back through Venmo after you covered dinner. And suddenly you're thinking, wait, did I just create a tax problem for myself? Maybe you've already done it dozens of times, and now you're wondering if the IRS has been watching those transfers all along. Here's the good news. Some of the things you're seeing online are completely wrong, but there is a real change involving how certain payments are reported. And if you don't understand the difference between a report and an actual tax, you could end up worrying about something that isn't a problem, or worse, overlooking something that actually matters. So let's slow this down and go through exactly what's real, what's not, and what you should know before you send another dollar to someone you care about. If this helped clear up the confusion, subscribe to the channel. I cover Social Security, Medicare, taxes, banking rules, and the financial changes that can actually affect your retirement. And if you know someone who has been worried about these IRS transfer rumors, send them this video. Sometimes a few minutes of the right information can save someone a lot of unnecessary stress. You're scrolling through Facebook. You see a post from someone in your age group. It says the IRS is now taxing money you send to your kids. Check your payment apps. And your stomach drops a little. Maybe you sent your grandson $500 for his car payment last month through Venmo. Maybe you transferred $2,000 to help your daughter with medical bills. Maybe you split a dinner bill with a friend and sent her cash through your bank app. Now you're wondering, am I going to get audited? Am I supposed to owe taxes on that? Why didn't anyone tell me this was happening? Here's what I want to tell you right now. Some of what you're hearing is absolutely wrong. But underneath the panic, there is a real rule. And understanding that real rule is actually important. So let's clear this up, because the truth is more straightforward than the rumors. The first thing to understand, the title of this video uses a word that's causing most of the confusion: taxing. Let me separate two different things that people keep mixing together. There's a difference between something being reportable to the IRS and something actually being taxable. Those are not the same thing. And that distinction is where almost all the confusion lives. A transfer of money between friends and family, your money going to their account, is generally not a taxable event. Full stop. If you gift your grandchild $2,000 for college, that is not income to them. They don't owe taxes on it. You don't owe taxes on it. It's a gift. It's yours to give away. But here's where people get confused. In recent years, payment apps like Venmo, PayPal, Cash App, and others have changed how they report transactions to the IRS. And a lot of people saw those changes and thought, oh no, the government is now taxing personal money between people. That's not what happened. What actually happened is the IRS updated reporting rules for payment platforms. Those platforms now have to report certain transactions to the government. But reporting a transaction to the IRS doesn't mean that transaction is taxable. Think about it. When your bank reports your checking account balance to the IRS on a regulatory filing, that doesn't mean your checking account is being taxed. It's just information. This is the critical part. Information flow and taxation are two different things. Now here's what changed and why. For years, payment apps operated in a gray area. If you sent money through Venmo to split rent or cover groceries, that movement of money wasn't being formally reported anywhere. The IRS knew this was happening, but didn't have a straightforward way to track it. Then in 2024, new reporting rules started rolling out. Payment platforms started issuing 1,099K forms for certain transactions. That form gets sent to the IRS. That form says, this customer received this amount of money through our platform. The moment people saw that form, they panicked. They thought, a 1,099K means I owe taxes. But that's not what a 1,099K is. It's an information return. It tells the IRS that money moved. It doesn't tell the IRS whether that money is taxable income. Here's a real example. Let's say you're 62 years old and your daughter moved back in with you. You both chip in for groceries. She sends you $200 through Venmo every week to cover her share. That's $800 a month. At the end of the year, your payment app might report $9,600. Does that mean you owe taxes on $9,600? No, absolutely not. That's your daughter's money coming back to you for expenses you both shared. It's a reimbursement, not income. But if that 1099K form shows up in your tax records and you don't understand what it means, suddenly you're worried. You think you're in trouble. You're not. You just need to be able to explain it. The actual rule that matters, here's what you actually need to know. Personal transfers between family and friends are not reportable as income by you. You don't file a form saying my son sent me money. That's not how it works. But the platform, the company that moved the money, they might file a form saying money moved through their system. That's their reporting requirement, not yours. Now, there is one situation where this matters more than others. If you're using payment apps or bank transfers for something that actually is a business or an income-related transaction, that's different. If you're a consultant and you're invoicing clients through Venmo, that's income. That needs to be reported. That's subject to taxes and self-employment taxes. But that's not the situation that's scaring people right now. The situation that's causing confusion is personal money between people. And those transfers are generally fine. The complication comes when someone doesn't understand the difference. They see a $1,099K, they get nervous. They don't report it on their taxes because they think it's not their responsibility. But the IRS already has a record of the money moving. So now there's a discrepancy between what the IRS knows and what you reported. That's when correspondence can happen. The situations people actually get wrong. Let me walk you through the scenarios that cause the most real confusion. Scenario 1, you help your adult child with bills. You send your son $4,000 to help with his mortgage. This is a gift. This is not income to him. This is not a tax deduction for you. You're not filing anything. Money goes from your account to his. Done. Years later, you might see a $1,099K or a record of that movement. Don't panic. If anyone ever asks, you can simply say, that was a gift to my son. Documentation helps. Maybe you texted him, here's $4,000 for the mortgage. Or you put gift in the memo. That's useful. But you're not committing a crime. Scenario 2, you split bills or expenses. You and your friend go to dinner. It's $80. She sends you $40 through PayPal. That's a reimbursement. That's not income. That's not reportable. That's two friends settling up. This is what payment apps were actually designed for. Scenario 3, you receive money, but it's a loan. Your grandson borrows $2,000 for his car. He pays you back $500 a month through his bank account. Those payments are loan repayments. They're not income. They're your own money coming back. If it ever comes up, you can show the loan agreement. Even a text message saying, I'm lending you $2,000, pay back $500 a month, serves as documentation. The problem happens when the money moves, but there's no record of what it actually is. If your grandson sends you $500 monthly, but you never mentioned a loan, and someone asks the IRS about it, suddenly you have to prove it wasn't income to you. Documentation is your friend here. What you actually need to do first. Stop assuming every transfer is a tax problem. It's not. Second, if you're helping family or friends with money, you can do that. You're allowed to. Just think about whether you want to call it a gift or a loan. If it's a gift, use that word when you send it. If it's a loan, consider keeping a simple record. A text message works, an email works,